stakeholders whatsoever.
All right, so that's the clarification as well as the understanding of the entire development there. But take a look at Paytm shares. They have been overexcited in trade today, spiked up in trade, and then have been still gaining about over 8% in trade. Let's shift focus to the REITs and INVIT side and take a look at Embassy REIT, a listed REIT in India, and how the share price or the unit price of that REIT had fallen right after the budget announcements. If we really take a longer horizon of that intraday, of that chart, we will see that it had fallen and it remains at those very levels as well, even though gaining in trade today. So let's talk about what really budget has done to this space. The budget proposal includes a big dampener for the listed REITs as well as INVITs, wherein the distribution of cash under debt repayment will come under the tax net for the first time. Now, to understand this and the impact on Embassy REIT, I caught up with the CEO of Embassy REIT, and he tells me that 40% of the cash distributed by the company is in the form of debt repayment, which could come under tax as per budget proposal. And on the other hand, the yields impact in the hands of the unit holders could be to the tune of 50 to 100 basis points. Take a listen.
So the recent budget announcement relating to taxation of one of the three components of distribution impacts annual returns by around 0.5 to 1% out of the mid to high teen returns which the REIT product has been envisioned to deliver. So yeah, while the recent budget announcement was a surprise to the industry, REITs continue to be a total return product which offers stable and predictable cash flows with long-term growth upside. The debt repayment year to date has been about 40% of the overall distributions. And this is the component which is now proposed to be taxed as other income at the marginal tax rate. This is applicable to all investors, not necessarily a particular retail or sponsor investor. And in effect, what it means, Nisha, is that the new tax proposal impacts our post-tax distribution yield to the extent of roughly 50 to 100 basis points, depending on investor category, which in turn implies that about 8% to 16% of our distribution element of our product, of the total return that we speak of, it's impacted.
All right, that is the word coming in from Embassy REIT. We are going to get into a short break now, but on the other side,